Making money on the stock market. Greetings from Ballarat, Victoria, Australia. I'm Jerome Nugent-Smith. This is episode 3. In this episode, I want to talk about the active daily trading strategy. Now, just to recall, episode 2 covered the set and forget strategy, and episode 1 was a broad introduction to what has happened over the last 6 months, from March 2021 to end of August 2021, where an extraordinary 47.5% return on investment was achieved with the set and forget strategy, but with the active daily trading strategy, the return on investment was 10,227%. Now in this episode, let's dissect how that came about, what is the track record, and more particularly, how to turn these results from a fictitious ASX fund that was of interest to my U3A students and also the broader Ballarat community who were listening to regular updates on Radio 3BA. So, to get stuck into it, just recapping on what was achieved over the 6 months on the active daily trading strategy, and that was from $100,000 to $100,000 to $10.3 million plus dollars. So it's a return on investment of $10,227,000 or 10,227% return. So how was this extraordinary return on investment achieved? Well, firstly, in contrast to the set and forget strategy, which is adopted by most superannuation funds and fund managers, where they invest in particular stocks, whether they be blue chip or mid-cap stocks or particular sector stocks, and they leave them there for a period of time, anywhere from 6-12 months to many, many years in the case of blue chip stocks. I took the alternate, in fact quite a radical approach, and basically said, well, if you were to invest in specific stocks, a number of specific stocks each day, and just turn that money over, what could be achieved over a 6-month period? Now remember, it's in a fictitious account, the same as the set and forget strategy, but again, it's all auditable. So over that period of time, there were some 556 trades, active daily trades on a daily basis over the 6-month period. So that was on average from anywhere from 2 to 4 stocks traded each day. In other words, getting in and getting out. So at the end of each day, in the main, there were a couple of exceptions, but in the main, the net position was all, the fund was 100% liquid. So there was no carryover of stock. The other thing I want to mention too is that there was no shorting, there was no leveraging, there was no use of other techniques other than identifying the stocks, placing the order, the buy order, and then as soon as the buy order was filled, immediately placing a sell order on what I believe would be an acceptable or plus anticipated return on investment for that particular stock on that day. So going back to the very start of it, this particular fund was activated on a similar basis to the set and forget. In other words, $100,000 was invested in 10 stocks, 10,000 in each stock. So therefore, at the beginning of this exercise on the active daily trading strategy, all 100% of the money was tied up in stocks. So there was no cash. So if an opportunity presented itself, which it did in the early stages, then I couldn't take advantage of that until I sold one or more stocks, or in fact liquidated the whole fund with this particular strategy. So after about 2 weeks or so, a little more than 2 weeks, an opportunity presented itself with one stock where the share price, well, the 10,000 had gone to $25,000 plus. So I sold those, waited the required T+2 period of time. Then the opportunity came where there was a major takeover for Crown Resorts. And that was at a 30% premium to the previous closing day's price. So I was able to get into Crown in the early stages. Remember, it was only $25,000, so not an enormous amount of money. But I anticipated that the fund, or that the share price on Crown, would go up somewhere between 30 to 40% during that day. And in fact, I think the intraday trading high was somewhere around 37, 38%, and then settled down to the closing price. The increase was about 28%. But so I placed the order. The order was filled, then put the sell order on at around about a 30% premium to the buy price. And that was filled because obviously the intraday trading price went as high as 30, 37, 38% for the particular day. Now remember, this is back in mid-March 2021. Now, so the fund had grown by $25,000 plus 30%, and a couple of days later there was a stock that I identified, and that put all the money into that stock, and that stock went up over 100%. I think it was about 150%. So that then set the pattern for what occurred over the ensuing 5.5 months. So in terms of, you're probably wondering, well, so let's get to the results first. So by adopting that daily active trading strategy, remember that at the end of each day the account was squared off, so there was no risk in terms of what might happen in New York or the Chinese market or any other, in terms of any other global impacts and so on. At the end of the day, after the first 5 weeks, the fund was completely 100% liquid. So let's have a look at what happened, what the results were. So over the 6-month period, the fund went from $100,000 to $10,227,657 or 10,227%. Now the number of trades was 556 over that period, and therefore something in the order of half of that, so half of 256 is 175, somewhere in that order, companies that were actually were invested in out of a total of 2,200, 2,300 companies on the ASX. So an extraordinary result. All the transactions have been recorded, and in the majority of cases, many of the specific transactions were discussed at the U3A classes with my students, because I hold a class once a week on the broad topic of boom, borrow, bubbles, beware or bust, and then the regular updates on Radio 3BA, which go to a much broader audience throughout Ballarat and the Ballarat region and so on Brett Mack's Ballarat Today, once a month every Tuesday at 10:45 a.m. So those of you that are watching this can tune in on the 5th of October for my contributions at 10:45 a.m. on Brett Mack Today. So what are some of the, I guess, attributes in terms of achieving this sort of result? and why hasn't somebody else adopted this particular strategy and so on. As I mentioned earlier, most fund managers, stockbrokers and so on, and even individual investors basically adopt a broad strategy of set and forget. They might have a specific bent in terms of investing in dividend yield paying stocks or blue chip stocks or mid-cap stocks or sector stocks like lithium, graphite, gold, health and biotechnology and so on. My investment strategy was totally agnostic. It was basically identify the stocks, make a judgment call, get in and get out, and usually within the first 2 hours of trading. So there was no lengthy waiting around for anything. From the experience that I've had both before and during this particular process was that most of, if not, well, the majority of the money was certainly made in the first 2 hours of ASX trading. And I think that that would be the case applicable to pretty much every stock market in every particular country. The ASX is no exception. So what next? Well, what I'm looking to do now is to take the fiction into reality, to set up a hedge fund which could be listed on the ASX or elsewhere, or could be private, to raise $5 million and to achieve a return on investment in excess of 1,000% over the next 12-month period. To take the fund, in other words, from about $5 million to in excess of $60 million over a 12-month period. That's my objective. It's a very challenging one, and it's one which I believe can be achieved by adopting the active daily trading strategy rather than set and forget. So with regard to the next episode, what I'll be doing is talking to you about some of the techniques and strategies and tactics that were used on the active daily trading strategy, and some of the, I guess, requirements that were applied and brought to this particular exercise and managing this particular fund. So there were no algorithms, there was no shorting, there was no leverage, there was no borrowing. It was kept very simple, so that at the end of the day, not only could I understand it, but basically anybody else could understand it, and so on. So I look forward to talking to you on episode 4, and thank you very much for your time. Goodbye from Ballarat.